Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, everyone. Ira Epstein of Linn & Associates with your metals market update, and this is your weekly version for Friday, and this is March 3rd, 2017. Now, we're still open because it's only pushing after, 2:20 or so in the afternoon, but the settlement prices are in, and you're going to see the gold is going to settle in the April contract around the 1226.5 level. The silver market's going to finish the day around the 1774, 75 level, and yet we've come up. Part of what that is we've heard Miss Yellen speak. She spoke at the executive conference in Chicago, executive council. And to make a long story short, the market heard what it wanted to. Now, you never know how these things are going to play out, ever. You can think you know the speech, you have it, you don't know what's going to happen. But she gave every single indication that there's going to be 3 rate hikes this year. We're going to see another hike in March, unless there's some piece of economic data that comes out. Stanley Fischer is speaking elsewhere in the country today. He said he is all behind the rate hike. So you're going to need something negative for them not to happen. And I just looked at the CME website. Got like an 86% probability it's going to happen now after these speeches. Okay, that's pretty good action, though, in the stock market. It's not breaking it down. The gold and the silver aren't breaking down. They have gotten the bear piece of news. They're absorbing it. Now, the settlement basis, and this is the key to understand, you're going to be down. I don't care that the market's up here. You're going to be down on the settlements, and that's something you have to consider. When we take a look at the gold monthly chart, the monthly, this is not the weekly, and remember, we're going to deal with weeklies primarily here, but I like to step back on the weekly updates that I give you for the monthlies every now and then. You've got the pattern of lower highs and lower lows, so the monthly basis is still pointing down, and we're only, 3 days into the current month. The important part of that is the market is holding the 18-month moving average of closes at 1218.50, and momentum is pretty much neutral right here. So you can go to the daily and the weekly charts for a bit more of the action. So on the weekly charts, and this is just each bar represents a week, you've gone recently from the end of December from 1123.90 up to 1263.10, and we've had a big weekly reversal. That puts 1263.10 for the next 2 weeks as a number that if you can take it out, you launch a bear trap. My theory, and that's what it's all about, my theory, is that when you have an outside week, if it's a down week, if you drive up over that high in the next 2 weeks, the market often goes to the next either key moving average or a Bollinger Band. Keep that in the back of your mind. When we go to an area chart of closes only, this is each week's closing price. We've gone from 1126.50 to 1256.90. We've backed off now about $20. Not very bad. I don't think that's a terrible back off at all. When we come to the weekly swing line, a little more interesting. You have a pattern where I show the apexes with an arrow. You've got higher lows and higher highs. Therefore, the trend is up until you take out 1217.30. Now, if you look at today's low, you were at 1223. I already know you're going to close. The settlement price is going to be at 1226.50. Remember the secret? At 1:30 Eastern time, the settlement is determined. And yes, the market will trade until 5 o'clock Eastern time. So you can trade all at once in here, but we already know the settlement price. The odds of it coming down today through that 1217.30, slim to none. Doesn't mean it can't happen, but slim, very slim, because you're up like this late in the day. Another thing I always look for are what are these weekly moving averages doing? Now, we've had a bearish crossover because the 18-week average got under the 100. But prices have stayed over that while that occurred, so it's an invalid crossover. You need price to be, if it's down, under it. If it crosses up, over it. That when you don't get the momentum there, it's just noise in the market, and that's all that I see. It's almost like they're skidding in terms of where the moving averages are hitting each other. On a pullback in the market, well, I'd see support against this 1202 to 1200 level. So even if you take out 1217.30, because price is over the 18-week moving average of closes, I would call that noise and not a signal that the market's breaking down. Got that? To me, very important is the market closing over or under that 18-week average. And when you add the 100 to it, you get, and they're together, that's a lot of support. In terms of market momentum, it's still pointing up. Now, I really don't read this quite the overbought and oversold ways that a lot of people do. You can say, hey, a chart's a chart, and I wouldn't argue that. You're in overbought territory, and you're consolidating that. You did this before here. But what you can do in these numbers is you can stay there for long periods of time. So I don't think the slow stochastic study works as well on longer-term charts as shorter. Now, when I go to the gold ETF, this is another area to look at. The recent break low is 116.15. So the trend is up because you have higher lows, higher highs. In this chart, the 18-week moving average is under the 100. The red's under the green, as you can see. So if you were to take out 116.15, similar to what you've got on the futures, I'd look for good size support right here. So that's all that I'm looking for if the market comes down. Unlike the futures, you don't have an outside week one way or the other. As we come up with the GDX, the gold miners, you fell right back to the 18-week average, and you're sort of sitting there right now. Now, the daily charts have been a lot more bearish than the weekly. The last break low here was 21.90. We broke through it this week, but look where the market's trying to settle, right up at the 18-day average. So you're back into a general support area. On the silver chart, you didn't quite make it up on the weekly chart to the upper Bollinger Band. It would have been ideal had it. And you've got this big reversal down in an overbought area. So this market can afford to pull back. And the beauty of silver, I like it a lot more than I do the gold chart, is that you'd have to get under 1681.40, which means you'd have to get under that 18-week moving average of closes to get to it. I think this market's going to be supported because of that. Silver's not in the same camp. The silver market breaks through the swing line, you're in trouble because you're going to be in a nasty spot on the chart. In the copper market, you still have the ongoing problems where the fights are going between in Chile and in Indonesia, where the miners are not working. In Indonesia, they're not exporting, they're not working, and in Chile, the Escondido miners just plain, the workers are on strike. Now, very shortly, workers can decide, do they want to go back? Because I believe a 4-week period is what they had to be out. That doesn't mean they will, my friends. I mean, they'd be called scabs and all kinds of things go on there, but we'll see what happens. Is the weekly chart bullish or bearish? It is still bullish until you lose this pattern of higher lows and higher highs. So you have to take out 264.15 to lose that pattern, and support regardless because you're over the 18-week moving average is 259.20. In the palladium market, you got right on up here, challenged the upper Bollinger Band, got through it by a fraction, and bang, right on down. So we have that outside week down. The market stopped and found some footing at the 100-week average in green at 995.60. The last break low was 998.20. And you've taken that out as well, going to 985. So you have your outside week down. In order to get bullish, you'd have to take out this high, and then you'd be right into the upper Bollinger Band. This has turned into an ugly chart all of a sudden. The palladium's also the same thing, a little more bearish, though, because you got lower highs, lower lows, and you're turning momentum down. Now, it's not in the bear camp when prices are over the 18-week moving average. The support is expected to come in around 731.50. So in a nutshell, you really don't have any bullish cases in the metal markets as a whole. That's the problem. When we look at the dollar index, the market has come down in momentum and it's starting to turn itself. The big question is, do we break through on the way down 164? If not, you've got the dollar showing itself higher lows, higher highs, bullish. That is anti the metals at this point in time. So when I put it all together, it's interesting. We see what's going to happen, and that's where you take it. Now, I was going to stop today at, frankly, right now, our market research where you can get the the $20 discount on it. We're still getting people signing up. So I'm going to let it go through the weekend. Here's what you do. If you want to get my market research for, normally it's $60 for $20 for the 30-day period, you got it. How do you get it? You're going to go to our website at www.iraepstein.com under research. You're going to go there, and you're going to write this down, by the way, IRA 20, all caps, IRA 20. IRA for the $20 discount. I'll honor it until we get back into the office on Monday, and then after that, you won't see this for a while. You may not see it again. How's that? But what you're going to get is you're going to get my morning subscriber video. And folks, that's why I've got that cup of coffee over here that's right now blurred. Let me tell you how it works. I get up typically somewhere between 3 and 5 in the morning. I start reading, start doing my work, walk into the office probably 7:38, but I've already done 3 or 4 hours of work. And by 8:30, I'm recording a video where I'm telling you at least what I think the pros are doing in the market. Day trading, position trading, where they're coming from, what's moving the market at that point. What it does in part is it backs up what I write at night. And if I had a trade recommendation, win or lose, I'm going to review that recommendation, add to it, say, nah, let's pull it because certain things have happened in the morning. Then during the day, if I see something to do, I put out special updates. Now, those will just say buy here, sell here, blah, blah. And then at 11:30 in the morning, I put out a full array of written information for you in market research. So you get all that. How do you take advantage? Well, I've just given you, if you want to buy it, it's IRA 20 on our website under the word research. But what if you want just a free trial? If you've not had one, that's the caveat. If you've had one, I'm not giving it again. If you hadn't had a free trial, I'm going to give you that time frame for free. Just click up here if you're watching me on YouTube, fill out the form, Ira's Research, do it under the website here, or you can even go to our website like the other people are doing to buy it, and you'll see the carousel of free offers. Click it, get what you need there. All you got to do is fill out the form. I'm Ira. Enjoy all this. It's going to be exciting next week because now at least we have Miss Yellen out of the way. We've got employment data coming up, and then the week after we have the FOMC. But I think the FOMC is now a known event. I think you build in that quarter-point hike. I'm Ira. You have a great day.